Hey guys, how's it going? It's Andy from Magoo Investing. Happy Monday. Hopefully you guys all had a fantastic weekend. I spent a lot of time outside. I did a hike on both Saturday and Sunday and it was absolutely beautiful. I'll throw up some of the pictures from that and then I'll play this video that shows just how windy it was. And it was pretty cold up there, but it was great to be outside. Today is also my 24th birthday. Woo, I'm starting to feel old. Instead of going out to celebrate because of the pandemic, I'm going to be celebrating in a different way. So I woke up this morning and I decided I wanted to buy some stocks with the cash that I've had sitting on the side. And in addition to the stocks that I bought today, I also bought some Bitcoin because I'll talk about what happened to that a little later on. Also, if you guys leave a comment in the comment section down below, in the next 48 hours after this video goes live, I'm going to be doing a massive breakdown about all the stocks you guys are looking to buy as of right now. So be sure to leave that in the comment section down below if you'd like to hear my analysis of maybe a stock you guys are debating buying or it's something that's already a part of your portfolio. So today I'm going to be talking about the two renewable energy stocks that I bought and discuss some of the stock market news that we've been seeing today, because when I woke up this morning, I definitely was not expecting to have as many news stories as we actually had. Since a lot of people don't finish watching the entire video, I want to talk about some of the important things that are going to be happening later on this week. And so Thursday is definitely a day on the calendar that I'm going to be circling because that's going to be a day to watch for the overall market. Last week, we saw a worse than expected jobs report that saw 140,000 jobs lost in the month of December, which was a lot worse than was actually previously expected. And this breakdown on the screen shows that almost all of the losses came from the leisure and hospitality sector. And it does mean that all of the jobs that were lost in the month of December came from women, which is very strange. And so the market didn't shoot down as much as I maybe would have expected based off of the worse than expected jobs report. But from what that means is people are expecting that since things are not getting better on the employment front, that the economic plan that Biden's going to be releasing on Thursday is likely going to have more money involved in it than previously expected. And the numbers that we've been seeing are expected to be in the trillions and not the billions. So there's going to be a huge amount of spending going into the overall market. And that's kind of why the market has been pushed up over the last week. And with the low interest rates supposed to be staying low for a while, the market hasn't reacted as negatively as maybe I kind of expected going into this week. Today we saw Bitcoin drop 20% this morning, going back down to 30,000, and I added to my position at that mark. I bought some more at around the 30,000, maybe 31,000, and we did see a little bit of a boost. So this is something that I've always said about my positions is anytime we see a major drop in price, I'm going to be adding on to my positions, and that's kind of the reason why I've been holding a lot of my portfolio in cash to take advantage of situations like this. Twitter was down 10% at one point this morning from the fallout of banning Trump from the platform, and NIO shot up after announcing a luxury sedan that's going to be marketed as a Tesla Model 3 competitor. As a result, Tesla shares were down this morning for the first time since December 22nd. So Tesla's been on an incredible run recently, and since they are looking to expand into the Chinese market, with NIO having good news, they're kind of competing against each other with that news. Just a reminder, there are going to be timestamps in the description below if you'd like to bounce around. But before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, I really appreciate it with the like and subscribe button, as would help my channel out a lot. It is my birthday, so be sure to smash that button. So, for those of you that don't know, my undergrad and my grad degrees are in marine biology and wildlife management. So conservation and mainly carbon emissions have been something that I've really been trying to focus on when it comes to my investing portfolio. Since it is my birthday, I decided that I wanted to kind of reward myself and buy some of the renewable stocks that I love going into 2021. And so I did make a video talking about my 5 or 6 favorites, and I'll link that above right now if you haven't seen it. But the first stock that I bought this morning was General Electric stock, ticker symbol GE. I've put this on a list of one of my favorite stocks to buy for 2021, but I think at this point it is overall has become my favorite, just my single favorite stock to buy. And so I want to give my reasoning why. And for one of the main reasons is it's a stock that I like that is at a pretty significant discount. It has been on a decline for the past couple years, but I think this is a stock that is going to do very well in 2021. If I had to put all of my money into one basket, I would be buying into GE fully. And so for one, this is a recovery stock. Even though I'm going to be focusing on the renewable energy part of it, this is a stock that's going to do very well as the pandemic goes away eventually. The main reason behind that is that their largest and most profitable business section is with aviation. And with the pandemic and the lower demand for travel, a lot of the airlines aren't going to be buying as many planes. And so as a result of that, we've seen some huge drop in sales. Also, in addition to the 737 MAX problems, GE's aviation division saw a drop of 44% in sales. And a year prior, that division made $1.4 billion in operating profit, and they had a net loss this year. So as the pandemic eventually winds down, this is going to be a great recovery stock because this is their largest and most profitable part of their business. And with the expected push towards Boeing, considering they are the largest U.S. exporter, I expect GE will benefit from that as well, as they produce the engines for most of their planes. And number two, this is an American company I think is going to get a lot of government help when it comes to green energy. With the Biden administration coming in, it's expected that green energy is going to be a huge focus, and from all of their plans going into the election, they're going to be investing heavily into renewable energy and green energy. As I mentioned in other videos, GE is already making moves when it comes to this section of their business. They're providing wind turbines for the world's largest wind bank off the coast of the UK, and when it's completed, it's expected to be able to power 6 million homes in the UK per year. And while there's 25 million homes in the UK, that is a huge move in the right direction, and it'll show that GE has the ability to provide these wind turbines for further wind banks that are going to be produced down the line. And so they've already announced a recycling plan for the wind turbines that's going to be used in cement production, and it's expected to reduce carbon emissions from cement production by 27%, and I think it's a fantastic idea. So I've already owned GE shares in the past, but this morning I wanted to add to my overall portfolio. This is a stock that I feel very good about going into 2021. I do currently have a put position that's likely going to expire worthless because of the increase in price that we've seen recently. So until that happens, I'm going to let all of the value disappear out of that and then sell another position. But I'm trying to get to 100 shares eventually, because my goal for having GE is, since it is a relatively cheap stock, I want to be able to have 100 shares so I can sell long-term, out of the money calls on my position to be able to bring in some additional cash flow that I'm going to be using to buy additional shares of either GE or other stocks. And so that's the goal right now. I'm nowhere near getting to that 100 share mark, but I'm also selling puts. So this has become a very large part of my portfolio. And once we go into February and I do my portfolio breakdown, you'll see that GE has become, I think it is my largest position at this point. And then the second renewable energy stock that I bought is NextEra Energy, ticker symbol NEE. When I woke up this morning, I really wasn't sure which stock I wanted to buy when it came between NextEra and BEP, which is Brookfield Renewable. But the reason I bought NEE is because it is the US's largest energy company, and it has an incredible track record when it comes to their stock price. Comparing its return since 2000, it's seen a compound annual growth rate, or CAGR, of 17.8% with dividends and 14.8% without dividends. So this is a stock that has an incredible track record, and for a utilities company, that is so impressive. I don't think you can find another utility company that has that level of a track record. And this has been outperforming the S&P 500 by a significant margin and shows how important that dividend is to its overall success. That's the difference between a 3,000% return and a 1,700% return over the past 20 years. While the dividend is only currently sitting at 1.7% from this chart, you can see that it used to be much higher. But while the yield is kind of hard to keep up as the stock price increases over time, the payout has increased. And as a result, it is a dividend aristocrat, meaning that they've raised their payout annually for the past 25 years. So it has a lot of history when it comes to that. And in the fall of 2020, NextEra offered to buy Duke Energy, ticker symbol DUK. And while this deal didn't actually go through, this is a huge step in the right direction for NextEra because it shows that they're trying to aggressively expand. And when you look at NextEra, as I mentioned, it is the largest US energy company with a market cap of $158 billion, and Duke has a market cap of 66. So they tried to merge with a pretty large energy company, and the rumors were that it wasn't going to be able to go through because of the anti-monopoly stuff, but it shows that they're trying to increase their size at a rapid rate. Looking at this chart of their assets over time, they've been continually expanding over the past 20 years. Is this a stock that's going to double in the next year? Probably not, probably like 99.9% no, but they have returned 27% in 2020, and their track record is absolutely beautiful, and it's a stock I really believe in because they have so much of a reliance on renewable energy, and they're investing in themselves aggressively. And so because of that, this was a stock that I've wanted to put into my portfolio since I talked about it about a month ago. And considering that they're expected to spend $30 billion on renewable energy projects between 2019 and 2022, they're only going to continue to expand over time. And with the upcoming Biden administration, I think they're going to be investing heavily in green energy, and I think NextEra is in a great spot to take advantage of that. So this morning I decided I wanted to reward myself for my birthday and give myself a little bit of a present and add some more renewable energy stocks to my overall portfolio. So I added to GE, which is a stock I've already owned, but it has become, I believe it's the largest part of my portfolio at this point. Then I added NextEra, which is ticker symbol NEE, which is a stock that I have never owned in the past, but I expect to hold this probably until I retire at this point. I don't see any reason why I would ever sell. It has an incredible track record of a compound annual growth rate of 17.8%, with dividends. And so this is a fantastic stock to hold for a long-term investment. So I'm very curious what you thought about my 2 stocks that I've decided to add to this list. And is there a green energy stock that you would like to add to your portfolio, maybe a little bit more than the GE or the NextEra? Let me know in the comment section down below. Thanks for watching this video. I appreciate all the support, and I will see you in the next video.